Straight up.
I wanted to go over before I pass the stick back to you and just kind of talk about, my portfolio and go over this. So I created this presentation for everybody. And so I really want to tap in. And for those of you all that stick around, this might seem boring to individuals that have just joined the conversation. But what I'm going to attempt to do is show you guys that this word in DeFi that everybody's so afraid of, impermanent loss, is most likely just because you don't understand how to work around it, build a strategy that can mitigate that type of loss and that risk exposure. And again, it's keeping you on the sideline due to lack of ignorance. Now, not everybody, again, just like not everybody wants to invest in crypto, you don't have to go out and invest in DeFi, but you can at least stick around for this video breakdown and educate yourself on how to mitigate impermanent loss so that you can start to like tweak little tiny things in your brain that are like, oh, okay, maybe this is an opportunity for me to change my life. How do I go about doing it in a mature fashion so I don't get burned, so I don't become a victim, right? And once you stop taking on that victim mentality, you start to open the door for what's called opportunity. And the people that are tapped into that, you will continuously expand, you will grow. Yeah, you'll take some losses, but if you can't stomach loss in the financial markets, get the out. Like,
Facts.
Don't be a little sissy lala scaredy cat. Like this is the financial markets. You're coming up against people like myself, like institutional scalper, like the individual that just passed the challenge in the CYPRX community that's now managing $2.5 million of capital. You're going up against people like that. And if you can't elevate, you're not gonna make it. You're not. It's sad, but it's the truth, So we'll go over this real fast. Tailoring your DeFi investment. I'll talk about my portfolio at the end of this, show you guys the two platforms that I'm operating on right now, how much money I'm making per month in the DeFi space, my current position and my portfolio size. And then I'll, pass the ball back to Mr. Aqua. And I'm sure after that we'll wrap up. So shout out to the 1,076 people that are listening to you guys, are seriously taking it out of your Friday to come and join us. We really do appreciate it. Remember, every Friday, obviously, of course, outside of our personal schedules, we're going to try to incorporate these Friday talks with you guys live on X. Always spitting facts to you guys. Again, we're not sitting here trying to get you guys to invest in DeFi or buy digital assets. But if you want education, if you want to take a step out of the matrix and really come and learn from a community of successful investors, again, not everybody in the CYPRX community is the successful investors, but the people that lead the CYPRX community 110% are. I myself, a multi-six-figure investor. Mr. Aqua, a multi-six-figure investor. Mr. Man, a multi-six-figure investor. Institutional scalper, probably a multi-millionaire. I can't even imagine, bro, man. The information that man has, and he's chucking that out to the community, and people are benefiting from it. So if you're inclined to want to tap into that with us, again, go visit cyprxtrading.com. We'd love to have you on the team. If you have any questions before joining about any of the services that we offer, reach out to the email. I'd love to hop on a private Zoom call with you and answer any questions that you might have. Chat up the customer support email. You guys can go find that in the link in my bio on X. You can find that in any of the videos under the description of the YouTube channel, and reach out. I'd love to talk to you. I'd love to answer any questions. So let's tap in. I want to just open the door. Again, none of this is financial advice. I'm going to show you guys a transition that I made. I won't bore you all to death and talk about that transition and what really I experienced in the market at the beginning of this year in DeFi, given this most recent pullback. I'll reserve that for the Wealth 28 Club members. There's a video on that explaining my transition and where I moved capital around and why in the Wealth 28 Club. But let's just go over my current DeFi strategy and just some questions to get the brain juices flowing about how to mitigate impermanent loss. Because like I mentioned, that's one of the main things that people are so afraid of in this DeFi space, right? So tailoring your DeFi investment, understanding how to tailor your DeFi investment strategy to match your risk tolerance and investment goals. It is crucial for your success in the decentralized finance space and just in investing in general, okay? Banking institutions, they moderate their risk. They have risk profiles. They have risk mitigation tactics. Shoot, almost every single organization has a specific team designated to risk management. So as an investor, what do you think you should do, right? Understanding your risk profile. So you can assess your risk profile by doing what? By elevating your comfort level with market fluctuations, define investment goals, and assess acceptable loss levels, along with determining your overall risk tolerance. That is 110% imperative that you do. You need to understand how much risk you can stomach. You shouldn't be investing any money into any financial market that you're not 110% willing to lose, under the assumption that that is a possibility, right? And once you kind of clear those hurdles mentally, investing kind of becomes easy. For example, if I lost every single piece of my portfolio in crypto right now, yes, it would suck 110%. But I've already calculated that risk and that possibility. And so the money that I have invested in crypto, which is a multi six-figure portfolio, if it goes to zero, I will not. Yeah, maybe I'll lose a night of sleep, and y'all are seeing me talk about it online. I'll be like, dang it, they got me, right? But it's not going to change my life. Like, it's not going to change my life. I will still have other sources of income. I will still have my cash cushion, my savings, my other investments, right? I'm not overexposed. And so when you are not overexposing yourself to a market that is inherently risky, you start to level up because you're not worried about it, right? All these people talking about, oh my God, the collapse of Tether, don't get involved in crypto. F that. You know how many opportunities there are in crypto right now? Just because Tether is a possible scenario, black swan that could happen, people are sitting on the sideline. Just because regulations aren't here, people are sitting on the sideline. You got to get over yourself. Now is the land of opportunity if you know how to tap into that. So evaluate your reaction to market fluctuations, gauge your risk off or risk on mindset. Do you have a risk on, risk off mindset, right? Determine if market volatility is something you want to deal with when building a DeFi portfolio. Because again, there are ways in the DeFi space for you to limit your exposure to volatility while still capitalizing on higher yield than traditional investments. Again, I will say that over. You have the ability to limit your exposure to market volatility through DeFi, but maximize yield earning. Again, yield earning that you've really never, since the past, like let's just say 4 years, had access to. Okay. So the number one excuse that we hear in the Wealth 28 Club is, well, what about impermanent loss? Okay. I know that's what I hear. Could you agree to that, Mr. Aqua?
Yeah, all the time. I hear that all the time, especially on just everything on X, on my YouTube. I'm always getting comments. You're not, thinking about impermanent loss. This is a huge risk.
No, that is 110% something that we think about in the Wealth 28 Club. And it is 110% one of the many things that gives you risk exposure in DeFi. So there are DeFi strategies that allow you to mitigate impermanent loss. And in today's video breakdown, again, that's what I'm attempting to show you all. I've taken an approach to mitigate my exposure to impermanent loss because of some permanent loss that I experienced in DeFi, which again, I broke down for the Wealth 28 Club. We're not sitting here saying that we always win. I'm very transparent when I take a loss, which is a lot less than a normal retail investor because I've mastered my skill and my technique, but I still do take losses, right? And so let me show you all now how I've taken an approach where I've limited my risk. So again, just going over defining investment goals, it really comes down to considering your desired returns, the time frame in which you are expecting those returns, and all of this is needed to set investment objectives. So how fast do you want to become wealthy? Reiterating back to what I mentioned, a lot of these people in crypto got invested thinking that they're going to become rich overnight because they never really had any well-defined objectives, goals, and never really set out a roadmap for themselves. Like in the first month, I want to accomplish 6 figures. And they've never really find a path. They just got in, go to sleep at night, and they're hoping for $1,000 XRP price tag.
Yeah, literally.
That's your normal every average day retail investor in XRP. So are you as an individual aiming for things like steady, predictable gains, less volatility and risk exposure? Or are you the type of individual who is willing to accept higher volatility and higher risk for potential higher rewards? But then again, that increases your risk to impermanent loss in DeFi. Okay. So let's go over this. Okay. So different risk strategies in DeFi. You guys can see this, right? You can see my screen.
Yeah. Absolutely.
Okay, cool. So we're going to explore varied approaches to DeFi investments based on risk tolerance from a cautious all the way to an adventurous phase. So we'll go from high risk, medium risk, and then I'll talk about low risk and end it there and show you guys how I went from when I first got into DeFi into like a relatively medium risk profile where, again, I'll get into some of the positions, talk about that openly that I was in. And now I've shifted to a more risk off approach and I'm more focused on stablecoins. Okay. So let's go over that real quick. Let's run through it. So evaluating the level of acceptable loss. You need to determine how much loss you can endure for potential gains. higher risk, obviously, of course, in DeFi equals higher returns, and in crypto and investing in general. But specifically in DeFi, when you're taking on more risk to get higher returns, you do have to have a more hands-on monitoring approach, because most likely you're going to have to learn how to set ranges on concentrated liquidity pools. You're going to have to actively monitor market cycles so you know when to take profit, when to reallocate capital back into your positions and deal with market fluctuations, right? And you're going to have to learn to some degree a strategy around rebalancing your portfolio. Because if you're in concentrated liquidity ranges and your position goes out of range to the downside, not only are you losing capital, but you're also not earning fees anymore on your liquidity position, which in DeFi is our number one goal, to constantly get our money working for us. So if your position goes out of range because you're in a higher risk position where you're in a concentrated range, you have to know what tactics to employ to, move your position, move your money around. So again, when you have to, we're getting this to evaluate your level of acceptable loss in your DeFi strategy. You have to even understand what type of investor you are. Is anything that I just said something that you're willing to deal with? If you're like, what? No, that sounds like a headache. Don't run away from DeFi. Just understand that that is an approach, a path that you could take if that interests you. If you want more APRs, you want more money, and you want more money faster, but are willing to take on the risk, then what I just said to you is, again, a road you could take. Most people don't. Reiterating back to the beginning of this call, the number one thing sitting people on the sidelines that we've seen as DeFi mentors is, impermanent loss. So that's most likely you listening that this second portion resonates with you. So do you want lower risk? Okay. Lower risk, obviously, of course, correlates to lower returns, but it requires less active monitoring of your positions. Okay. So, for example, if you're in wide range liquidity pools on stablecoins, you don't have to adjust your ranges, right? You're not really dealing with the market volatility, bullish and bearish markets, because stablecoins, to some degree, whether it's like a cent or two, stay relatively stable pegged to the United States dollar, right? And so again, you can still in stablecoins benefit from yield generation, much more yield than a bank and financial institution will give you. So I wrote some examples down for you down here at the bottom. A more high risk individual would be an individual that's in liquidity pools or on DeFi platforms where both crypto and crypto are involved in whatever position they're in. So that would be like XRP mag, right? XRP up against magnetic, and people are providing liquidity to that pool for yield farming. That would be a high risk DeFi investment. Not only is magnetic DEX a little sketchy on the internet, they're a brand new cryptocurrency and DeFi platform that doesn't really have a long-term history to go off of, right? They're not.
Yeah.
So I would classify it as high risk. I'm not saying not to get involved in it. I got involved in it in the early days, took some profit when MAG was over $3,000 a coin. We got in when it was like $200-$300 a coin. Absolutely benefited from it. Back to what I said, we were able to stomach that volatility, deal with the market risk, but capitalize on current market opportunities, right?
Facts.
So medium risk would be something like a crypto paired with a stable coin, right? So you're really only dealing with one-sided market volatility in the digital asset. For example, if you're up against like soy and USDC, which is a very common pool I see amongst DeFi influencers. They always talk about the Turbos Finance DEX because it's probably one of the most easiest DEXs and platforms to integrate on as a beginner, right?
Yeah, for sure.
That pool to me would be more medium risk, okay? Soy has a lot more of a track record. The Soy network has a lot more of a track record than, the magnetic DEX and the XRPL. And well, not necessarily the XRPL, but I'm just talking about like the DeFi developments, the DeFi.
DEX.
Yeah. DEX versus DEX. The Turbos Finance DEX and the Soy network has a much more established DeFi ecosystem. You can go and prove this yourself by just looking at the TVL locked on the Soy network compared to the XRPL, right? I'm not making this up. I'm not trying to talk shit about the XRPL. I'm just saying it's a lot less developed in the DeFi niche compared to Soy network. Okay.
Absolutely.
And so I'd classify that as a medium risk, right? And then low risk would be a stable coin up against a stable coin, where again, you're mitigating that market volatility. You're not really dealing with impermanent loss, unless obviously, of course, the stable coin pegs, which we'll get into in just 1 second as one of the risk factors. But again, not running away from DeFi. And just because you don't want to take your XRP out of your long-term cold storage wallet doesn't mean that there aren't DeFi opportunities for you in the now, because there 110% are. Okay. So let's go to the next slide now that I've gone over that rant. So moderate risk investor approach, seeking a balance between risk and reward and exploring opportunities with a moderate volatility for decent returns. This would be like your blue chip crypto assets paired with a stablecoin, like I mentioned. Okay, so like your XRPs or your Bitcoins or your Ethereums or your Solanas or your AVAX, or, you know, shoot, your Algo has a DeFi ecosystem, your XLMs, all these blue chip assets paired with a stablecoin. Okay, and then we have high risk, obviously, of course, meme coin liquidity pools. Okay, meme coin liquidity pools and crypto paired against another crypto. So you're dealing with both sides of market volatility in the liquidity pool or position that you're in. Okay. And then obviously, of course, meme coins, you don't really have to, I don't need to explain that to you guys, right? Meme coins are inherently more volatile than other digital assets. So the last approach is the low risk investment approach. And now I'll transition into sharing my portfolio with you guys and talk about, you know, my approach. And low risk, that's more so stablecoin paired with a stablecoin. So like USDC paired with USDT, you're providing liquidity in a liquidity pool on a decentralized exchange to this platform and earning yield. Okay, well, we're going to talk about that. So obviously, of course, this would be the approach that as a low risk investor, full circling back to the beginning of this speech, I mentioned you need to be able to establish that whether you're high risk or low risk. This type of strategy is something in the DeFi space that's most likely going to be more appealing to you, that you most likely do not know exists. Okay. And again, if you do know it exists, why aren't you taking advantage of it? Why is your money right now that you're making from your 9-to-5 job or your business not earning yield more than what the bank is giving you, right? The bank is giving you absolute garbage. In DeFi, on stable coins, again, if you're in the United States making the dollar, this is really beneficial to us because we're combating against the devaluation of our currency currently. The devaluation of the United States dollar year after year after year continues, and it will continue, okay? Because they're going to continue to print more money. How are you going to combat against that? Well, DeFi allows you to do that, and that is why they do not want you involved, because you can take your US dollar, turn it into a stable coin right now in the DeFi market and earn 50 to 60% yield on it right now. So think about that. All the individuals that become multimillionaires in this space in the next bull market cycle can literally take on a platform that I'm going to show you right now. They can take $100,000 and go put it in a stablecoin pair and earn over 40% APR on it. Do you know how much money that is per year? Do the math. That is a minimum wage salary in DeFi. If you become a millionaire and you have $100,000 extra dollars just to deploy to DeFi, which again, a lot of people that are early adopters in this space are about to have that type of money.
Absolutely.
Okay? And if you don't know how to leverage it, you're going to lose it. I promise you. I promise you, if you think you're going to go and you're going to get the same returns in the traditional space by buying real estate or by investing in a business, you're going to get the same returns that you're going to get in blockchain, crypto, and Web3. You are absolutely delusional. Anybody that becomes rich, in my personal opinion, that puts their money back into the traditional system over time will lose it.
Absolutely.
That's my personal opinion.
Unless your brick and mortar retail business has something to do with like artificial intelligence, robots, you know, a lot of stuff that's just like automated, you know, self-checkout. You know, in the future, when you go to Target and Walmart, right now they have self-checkout. In the future, there ain't going to be no humans in there. There's going to be robots walking around. You can ask the robot some information, and that robot's going to be probably way better than most of those humans that work at some of those places, because a lot of those people are just not even happy where they're at. But like, that's where the future is going. But if you're going to start a business that's like the old, archaic, old-fashioned way of doing it, like the metaverse is gonna box you out. Let me back what I'm saying. Like, I don't think that this is gonna happen overnight, by the way. Like, this is gonna progress over the next 10, 15, 20 years, and it's gonna happen over time. What I mean by people that put their money back into the old traditional financial system are not gonna keep pace with the new financial system that's being built. You will never be able to find these gains that I'm about to show you in the traditional financial system.
That is just a fact. So if you choose to stay in the traditional financial system, someone in this new DeFi, crypto, Web3 space will 110%, if they do it maturely, if they do it according to regulations, and if they join a like-minded community to keep pace with the times, like, you know, the information that we offer in the CYPRX community, you will 110% outpace somebody that does not make that leap. Guaranteed. So let me just, you know, continue this piece for you guys. So getting into kind of my strategy. So risk averse investor approach. That's the approach that I've now taken to DeFi after having benefited immensely from it and losing some money in the space over the past consecutive couple of months, physically sharing that with the private community, talking through my portfolio allocation and everything. I'm going to show you guys my portfolio today. So risk aversion investors. Personally, I chose to prioritize capital preservation and stability by choosing safer options. Again, it's not completely risk-free, but it's a lot less risky than the other options I mentioned in stablecoin pairs. The strategy involves investing in stablecoin pools with low volatility, ensuring a hands-off approach for stable returns. Like I mentioned, the vast amount of the positions that I'm in will require very minimum monitoring, give or take my own personal monitoring. Like I'll just want to go check my positions because I feel like looking, but I won't really have to do anything. I won't have to rebalance. I won't have to adjust anything. If the market's bearish, I won't really care. If the market's bullish, I won't really care. Aside from the APR fluctuations, I won't really care, right? Because stablecoins, again, outside of the DPEG scenario, are relatively stable, okay? So let's continue. So I said high yields savings account strategy. That's the way that I'm thinking about this. I'm thinking about DeFi right now, okay, in the early stages of DeFi, of how I can build a portfolio that's $500,000 to $1 million and just have it earning yield for me. You know, how can I make $500,000 make me $100,000, $200,000 a year on just stable coins? And it is 110% possible in the DeFi space right now. So again, consider what I mentioned, the people that make multi-millions in this next bull market cycle. Let's say you make $10 million in the next bull market cycle. You will literally be able to take $500,000 of that money, learn how to plug it into DeFi properly. And if you even just earn 20%, 30% on that $500,000, you just retired.
100%.
Okay. So that's what, again, I'm attempting to do in the now. Is I'm not attempting to take an approach where I'm chasing these high APRs, because they're there in DeFi. Don't get me wrong. You could go right now and find a pool that is offering 500% plus APR, guaranteed, right? But with my DeFi position now, I'm attempting, because I have other sources of income, to just build a high yield savings account in stablecoins. Okay, so exploring a low risk approach to building a high yield savings account in DeFi using stablecoins and DeFi options. Stablecoin liquidity pools, again, that's what we're focused on. Granted, excuse me. The DeFi space in stablecoins is massive. You can lend, you can borrow, you can yield farm. Like, there's a lot of stuff you can do. Okay, my specific approach is being a liquidity provider in a decentralized exchange to a stablecoin pair and earning, you know, APR off of those two stable coins being traded on that exchange or on that chain. Okay, that's my approach. So I'm not lending, I'm not borrowing, I'm not just liquid staking or anything like that. I am being a liquidity provider. So that's what I'd call myself at the end of the day, as a DeFi liquidity provider. Some people are DeFi lenders, some people are DeFi borrowers, some people are, you know, they're DeFi liquid staking earners. Okay, so you need to be able to determine that in your strategy, what type of approach you want to take towards earning in DeFi, because there's so many little tiny sub paragraphs and niches, which again, we go over in the Wealth 28 Club course material. So strategy, execution, and process. This is my process. The strategy involves investing in stablecoin pools with low volatility, requiring a less hands-on approach. So here are some pros. Obviously, of course, way more yield than a traditional investment. Your ability to diversify is immaculate because there's a lot of different stable coins out there. Granted, it's not like a massive list like the cryptocurrency market, but you still have a very diverse set of options. Okay, especially considering that now multiple jurisdictions are very interested in stablecoin development. Okay, so like Switzerland has a different stablecoin outside of USDC and so on and so forth. And like, so all these global jurisdictions, eventually, like I mentioned, the individual in Africa, to the same degree, will eventually be able to use a stablecoin in said jurisdiction, or maybe just a USDC stablecoin, and go and earn the same exact yield and APR that a wealthy individual in Malibu, California can earn. Okay. And that is a fact. So you are dealing with less market volatility as a pro of utilizing stablecoin options in DeFi. You're not really having to deal with the market being up or down because stablecoins remain relatively stable outside of, like I mentioned, APRs in a bear market sometimes tend to throttle down or vice versa. Okay. So you do have to deal with APRs throttling down or up. But then another benefit of my strategy is less monitoring of my positions. I want DeFi investing for me to be stress-free. I talk about this to the private community. One of the main ways that I became a profitable investor and trader is I created an environment in my strategy to make my trading and my approach to the markets stress-free. I don't care about what everybody else was doing. I don't care about just a certain set of factors, because I've created an environment in my strategy, a certain set of rules where I've eliminated stress, right? The markets are already inherently stressful. So if you're coming into DeFi and you're making a stressful environment for yourself, you're going to lose money. You're going to think it's a scam. You're going to fall victim to things because you're already stressed out. And that stress will correlate in the form of energetic connections to the market, and you will have shitty results. I promise you. So something that I've capitalized teaching the CYPRX community members is, if you want to become successful in these markets, you need to create a stress-free environment. Now, each person is able to deal with certain in different levels of stress and certain in different levels of risk, which again, everybody's different. You have to be able to determine that. So for me, DeFi, I already deal with a lot of, stress in my business and stress in my personal life. So for me, DeFi investing, I took a step back and I was like, I want this to be as stress-free as possible. Outside of assessing my risk and understanding that all the money that I have could go away, and that part being stressful, I don't really want to deal with any other stress. So I did that in my portfolio. Okay. I hope that me talking like this just shows you guys how mature we are here at CYPRX. Like, we're not just here, like lollygagging with a little bit of money. Like I got a very big chunk of money in crypto, like we're not here just making stuff up to, man. All right. So the first position that I want to mention to you guys, again, this is not financial advice, I'm just showing you guys the platforms, is Ramsey USDC. As of time of recording this video breakdown, Ramsey is a next generation automated market maker with a secure design to serve as a central liquidity hub, and it is currently offering a 28% APR on the USDC USDT pair on the Arbitrum chain, right? So you can go and you can look at the Ramsey's DEX. This is it right here, ramseys.exchange/liquidity. And it gives you a list of the overall liquidity pools that you can go and be a liquidity provider for. And this is very interesting. This is actually good to see in the live recording, because what did I just mention? One of the things that you are going to have to deal with as a stablecoin liquidity provider is the APRs throttling up and down. So you'll notice right here is the USDC USDT pool currently on Arbitrum can offer upwards, again, depending on what range you set, 122% APR right now, right? So if you had $100,000 and you went and deployed $100,000, 50,000 to USDC and 50,000 to USDT, your $100,000, again, unless USDT or USDC depegs, is going to remain $100,000. However, you're going to start earning 122% on that. And now if this APR, which it will not, but if it did, hypothetically speaking, again, stay the same the entire year, you would earn over $122,000 on your $100,000. Now, again, that is not if you decided to re-auto compound that. So every single time you earned money, you put it back onto the pool. And now if you understand the power of compounding, again, just do the math yourself. But remember, the APR does not stay the same. I want to let everybody know that. And this is a good example because look, when I made this slide for you guys, the APR was 28%, right? Now the APR is 122%. Tomorrow it could be 36. The next day it could be 10. Again, at the end of the day, or at the end of the week, at the end of the month, you will have the data, hopefully, to see over the course of, and again, I track the data. I write down every single day or every other day what the APRs were so I can see what the consistency is over the course of a month and over the course of a year, okay? Because if the data is going from 5% all the way up to 120%, back down to 40%, then over the course of a year, I want to know what that average percentage is. And most likely on these positions, I have never seen, since I've been involved in DeFi, a USDT USDC stablecoin pair that has offered over 10% APR go below 10%. You know,
Yeah.
most of the APRs on these liquidity pools stay above 20%, 40% on these stablecoin pairs. And so even if you just take 20% as your bare minimum on $100,000, let's say you become a millionaire the next bull market cycle, and you're earning 20% per year, that's $20,000 per year for doing absolutely nothing but being a liquidity provider because you learned about DeFi in the early stages of DeFi.
Facts, bro. And so many people, like you're saying, are not going to understand DeFi when this bull run comes and everyone has money that they've never even had before, stupid amounts of it. They're gonna, go and blow it all, and they're gonna look back because you know what? I strongly feel like all this DeFi stuff right now, I think it's gonna be like social media is gonna be filled with people educating on DeFi, APRs there. So in the next bull run, people are going to look back and be like, dang, I should have gotten DeFi like back in 2023, 2024.
100%. The example of the Arrow trade that I just displayed to everybody, where we called out the bottom of Arrow most recently and price flipped 140%, is a perfect example of opportunities that people are sleeping in the market simply because they do not know about them. That's it. It's as simple as that. And if you want to know about these opportunities, you're going to need to be a part of the community that is not tapped into the retail herd. The retail herd is being distracted right now. They were distracted over the past couple of days with the whole Trump escalation and thing that happened. If you go look at what happened, the exact day that crypto started to appreciate in value was that day. You know what I'm talking about? You know?
Yeah.
And
Yep.
everybody was distracted. This is not a coincidence, people. These things happen in cycles. This is all cyclical. I won't even get into that. So just to finish my spiel real quick, I want to show you the other platform that I am involved in. Again, it's not financial advice. I'm just openly sharing my portfolio. Aerodrome USDC MAI. It's a pair. Aerodrome, again, the DEX native digital asset on this DEX is Aerodrome. Serves as a central liquidity hub designed for base, offering a 39% as of time of making this PowerPoint pair. APR on the USDC MAI, which is a stablecoin pair. Okay. And another one, they also have a liquidity pool with 40% APR on the dollar and USD plus pair. Now, I just want to show you guys, because something that we pay attention to in the CYPRX private community is we kind of have like this checklist, what type of things we want to see in liquidity pools before we even get involved in them, like a checklist, like we want to see healthy TVL, we want to see healthy fees. We want to see that it's with a pair that's, attempting to be regulatory compliant or a blue chip asset. Again, we have a checklist. This is not just some, go chase high APR schematic. Okay. But if you just look right here, like here's dollar USDC. Okay. So stablecoin up against a stablecoin, basic stable. So you're not going to be concentrating liquidity on this. Is most likely a wide range. Okay. There is $65 million in TVL locked on this specific liquidity pool. So that means that somewhere out there, whether it's one person, okay, or whether it's multiple people, as a collective whole, you do the math, okay? Again, to some degree, the math is going to fluctuate, but just generally do the math. What is 36% annually of $65 million? You do that math and then tell me you don't want to get involved in DeFi. So again, go ahead, bro. Go ahead. What were you going to say?
$22.7 million, bro.
Okay, so now let me full circle. Remember what I said to you guys, okay? The people that become multimillionaires in this next crypto market cycle that learn how they can make 36%. Again, let's say you become a 50 millionaire, you don't have to go take your $50 million and put it into a liquidity pool. But if you went and you took $100,000 of your 50 million, instead of going out and buying a whole bunch of real estate properties, like you're going to make this type of return.
Right. Yeah, bro. Not even a business has those type of margins, bro.
You're not going to make that type of return. So learn about this stuff now. And I'm not sitting here saying that these APRs are going to stay relatively this high forever, which is why now is another great endeavor as to why you should be capitalizing on them.
Exactly. The now.
Now. Okay. I think that they're still going to remain higher than the traditional system. So maybe they throttle down on these stable coins to like a healthy 10 to 16%, but still, if you take 16% of $100,000, that's still 16 racks per year you're making.
Absolutely.
Passive income. So anyways, last but not least, I just wanted to share, just my quick portfolio with you guys. Currently on the Aerodrome platform, in 2 different positions on Wrapped ETH Kalima, which I did not go over in this specific video. Got about $3,000 invested in that pool. Aerodrome USDC MAI, that is the stablecoin pool that I just went over, have about $5,000 in that position. As of time of recording this and updating my portfolio last, it was making 39%, which is roughly about $5 a day or $165 a month, roughly about $1,981 per year, doing absolutely nothing. Ramsey's USDC USDT, roughly about $3,500. And this pool, 28% as of time of making my last update for this, which is about $2 per day, $81 per month. Overall, with my combined positions right now, even though one of them is not a stablecoin position, I'm still making over $1,000 a month just in DeFi. And I mean, if $1,000 a month in DeFi, like I said, my crypto portfolio, my long-term bags is way bigger than my DeFi position, way bigger than my DeFi position. But again, showing you guys that we're not here just playing. Like $11,000 is not, it's not a freaking exponential amount of money, but we're not in DeFi moving like little tiny $50 here, $100 there. No, we're really putting our money on where our mouth is at, investing our hard-earned money. I know Mr. Aqua's position is way higher than this, way bigger than mine, and we're openly talking about and exposing where we're plugging in capital to our private members, like what platforms we're invested in, doing Zoom calls and talking about the developments and really showing you guys that at the end of the day, this is all real. And for the people that want to take advantage of the opportunity is there, but you have to be able to stomach the risk. Once you can get over that risk hurdle, and I just showed you guys in this video breakdown how to some degree, you still have risk, right? So for example, with stablecoins, you do still have to deal with, let's talk about the pros and, did I already go with the pros and cons? I think I did. One of the cons is a stablecoin depegging. What if a stablecoin does depeg and you're in that pool, and that's a risk you have to take. Again, the $11,000 that I just showed you that I have invested in DeFi, I don't care. If I lose $11,000 tomorrow, cool, whatever. But guess what? If I hold that position, if I grow that position, right now I'm making $1,000 a month. By the end of the year, if again, these APRs stay the same, I'll be making $3,000, $4,000, $5,000 a month just off stablecoins.
Bro, that's the way right there, bro. That's the way.
So, this is not trading. This is, at the end of the day, a new way of investing that not a lot of people understand, not a lot of people know about. And yes, there's other communities out there in the DeFi niche. There's other YouTubers that cover this. There's other individuals that even have courses on this. And again, in the Wealth 28 Club, we're not here to knock anybody or say that somebody else's course isn't as good as ours, but we're just a community of like-minded individuals. And if you tap into what we're saying, if some of the info on previous video breakdowns hit home for you, or you're like, dang, Cypress seems like a cool guy that I'd love to connect with and have a conversation with someday, tap into our community. Because once you come into the community, you have that option. And not only do you have the ability to talk to myself, you have the ability to watch other interviews of other like-minded individuals in our community. And then if they're people that you can relate with, you can message them, you can tap in,
Facts.
It's like such a good time to be a part of the community, to be a part of a space that's growing like the DeFi space. Yeah, there's risks, but you already inherently hold or own crypto, most likely if you're listening to this. So you're already part of that risk exposure.